Moving on to Nigeria, we did see that market tick down again yesterday. It's beginning to slide quite a bit over the last few sessions. We saw the NSE All Share Index closing at 33,665 points, really on the back of the losses we're seeing in the banking sector. Let's now speak to Babajide Solanke. He joins us in the studio. He's from FSDH Merchant Bank. Jide, thank you for joining us. And like I did mention, it's becoming slightly worrying, the trend we're seeing in the NSE today. We're seeing the market continue to fall, and a lot of people talking about the banking results being a factor here. Your thoughts about the trend we're seeing?
Thank you, Wale, for having me. The trend we're seeing, as you rightly mentioned, is a downward movement in the NSE All Share Index, and fundamentally driven by the banking stocks. And it's not too far-fetched, because the banks, well, some of them gave very good results. Everybody was impressed with this Zenith Bank, GT Bank. Aside of that, apart from those two banks, other banks, well, the other one we saw, the other Access Bank that we saw, we saw that the bank had some problems with some of the loans
so the Q1 numbers from Access,
and the Q1 numbers again
disturbing, right?
made a mess of what we should expect in the future. But we're not too shocked, because we expect such kind of results, because as we said, the banks need to grow their risk assets, the banks need to expand the balance sheet. It's no longer, they're not just going to lock in government securities anymore and begin to reap the benefit of high yields. And so there's apprehension concerning the banks. And again, some banks have not released their results, so people are worried. The market is not informed about what's going on. We understand that the banks have a lot of reporting entities, a lot of regulators that they need to report to peruse their accounts and approve of it, but that's not well communicated to the market. So people just think that, what's going on here? What's going on here? And the market doesn't like vacuum. Somebody needs to feed us with the information. Somebody needs to put information there so that people don't just react and have the head mentality.
Well, we continue to see results, and of course, Diamond Bank should be taking us further into the Q1 numbers. We're expecting them to release today. Yeah. What are your broad expectations for Diamond Bank? Because a lot of people talk about the full year numbers. They cite the positives of the fact that they've returned into a very strong profit, but of course, they didn't pay the dividend given the plans that they have to raise new capital.
Yeah, for Diamond Bank, I don't expect Diamond Bank results to be far away from what Access Bank gave to us in terms of the bank's earnings. We're still going to see some kind of drop in the earnings compared with the comparative period in 2012. For Diamond Bank, you must understand that Diamond Bank result was very good. They returned to profitability, as you mentioned, and the reason why they did not give dividend because they had a negative revenue reserve. It was impossible for them to pay dividend when they have negative retained earnings. It was impossible. So going forward, as I said, we do not expect the results of Diamond Bank and other banks, at least for Q1, to be very different from what we saw from Access Bank.
Okay, and of course, some other news in the market yesterday. Presco, the agro company, correcting its full year numbers. PAT is now 3.5 billion for 2012 as opposed to the 8 billion reported earlier. So, and of course, we did see the share price take a bit of a hit. Your thoughts about that development?
Presco was at the floor of the exchange yesterday to give us the reason what happened and to apologize. It was almost an unpardonable error from their part, and they apologized seriously. But the stockbrokers are not convinced. What they seriously think is that they think that the company should make a public statement, publish in the newspapers and on television, apologizing, because a lot of people have made investment decisions based on that earlier result, and they're coming to tell us that they made a mistake based on some staff's error. It's unforgivable. We need, but that brings to mind the question that companies need to put out correct information out there, because it's obvious, becoming very evident that your market is driven, by these results and expectations, and these are the correct things that we think the market should be driven by, which is a sustainable growth pattern. The market is driven by earnings and earnings expectation. So companies should be careful. They should look at their books very well, and they should, put information that are correct out there.
All right, and another news or information, an update, if you like, from the NSE CEO, Oscar Nyema, saying that local investors now represent 59% of investments on the bourse. That's compared to about 60%, which we saw earlier. Are you worried that we're seeing a bit of a decline? Because it could be also a reflection of the fact that maybe some foreign investors are buying up a little more and then, of course, increasing their percentage of the total trades.
Yeah. Well, it is difficult for us to just place the correct argument right now, of course, until we have the data. We just spoke it. Until we have the data, we can actually investigate more and see what actually really went down. But I expect a continuous redistribution of the contribution of both local and foreign investors as we move on. It's a normal thing. It's not anything out of normal. And of course, again, we must understand that this season that we have is an earnings season, and of course, historically we should have seen some positive reaction from the market in terms of giving the good earnings that we saw. But we're seeing some other reasons, more of herd mentality than the banks. As I said, being heavily capitalized stocks and stocks that actually drive more momentum in the market. So I do not see anything, as I've mentioned earlier on, anything out of order, with the redistribution of contribution of whether local or foreign investor. It's an ongoing, it's good to keep, occurring.
Okay, let's come back to the discussion around the volatility we're seeing in the market these days. It's coming down a little bit. Is this a buying opportunity in your view, or do you think we should wait a while before we begin to pick up some of these stocks, particularly in the banking sector, because they will be in the news over the next few weeks, of course, with the results coming out?
I think, for me, I think we should still wait a while. I strongly, as I mentioned earlier on this program, I strongly believe that the market, there's some kind of asset price bubble in the market right now, because most of the stocks prices that we see have reached the potential in terms of upside potential, and the only thing that can happen to them is to come down. So for me, what is currently going on is normal. We should have some correction. We should have some sell-off. We should have some price going down. But the price is still going to come down more. Late into April, early into May will be a good opportunity.
Okay, and as the prices slide, which stocks are looking attractive for you? Which stocks are you keeping your eye on?
For now, the stocks that look attractive to me, if prices come down, I would take Cadbury to continue to look attractive. I'll take GT Bank to be attractive to me. Lafarge, the building materials stocks would be a good one from there. Fast-moving consumer goods stocks as well, and a few small cap stocks here and there as well.